All right. So last time we were talking about waves, and that brought us to channels. Of course, the one, two, three waves inside of structure, inside of channels. This is something that I think everybody kind of got a good idea of what we were looking here. It's pretty simple. But now I know a lot of people, while we're struggling to build boxes, or some people are struggling to build boxes, um, there's also parts of channels or parallel channels that we also define and utilize as well. And a couple of those things are, we're going to start from top to bottom here, is the mouth. Now, this term some confuses people quite often because they're not sure what the hell I'm talking about. But a mouth is just how a channel starts. Typically, you're in consolidation, you make a large move out, you go fill empty space, and then you pull back, right? And typically, you are going to see a complete move up and a complete move down, back to almost where you originally took off. And typically, if that holds and bounces, those two first points of contact will actually start the establishment of trend, right? Especially if you're in a downtrend and then you consolidate and then all of a sudden you pop out and then you pull back and then people are bearish again and then it curls right back up. This creates that uptrend. Points of contact is also something that defines a trend where trend is established, right? An upper channel, points of contact can happen within a multitude of channels and help us find said channels. So you can see here that even though this channel has been expanded, those same points are like a median. You can see it basically runs the same way. That was a fat line, Jesus Lord. There you go. Now, I don't talk about this a lot, and honestly, I probably won't talk about it much either because it's just not that important, right? I think what's more important because is that you actually find the trend itself. But channels can be separated or extended or expanded into, like, you can, a lot of the times if you're going for a break of a channel, you can stack one on top of it and find the confluence in front of that, right? The only thing that I'm trying to explain when I tell you this is that channels are like, if I'm down here, right, and I'm looking at this channel, this is a fucking 5 minute, 10 minute, 15-minute channel. But what is it adhering to? The 24-hour mainline channel, right? So just having an idea of where you're at inside of a channel or inside of any sort of trend is uh, a good way to help you find and establish where you're at in that trend. So again, this is mostly a target and trend finding tool. So when I'm in trend, or let's say I'm like in this example here, I'm holding that channel, I can use that lower time frame channel break in correlation with my horizontal structures. Now, channels are not intended to be the sole control of price, but they do show trend control, and it's good to know which direction you are heading. But channels are capable, as you can see in this example, even if I had drawn it here, right? Channels are clearly capable of breaking out. Now, one thing that, I mean, I could do here is I could place the same channel inside or in between those, and you'll notice that those points line up. The point here is that we're dealing or we're operating inside of a fractal. This can be a useful tool if you have good trend. If you don't, it's not really, there's really no point in trying to force something like this. And that's I would say this is, number 5 or something. It's not the number one most important thing that we need to be focusing on. Stacking channels, again, is just a tool that we use if we're looking at a channel potentially going to break, right? And this can occur or happen on any single time frame. And we'll go through some charts and actually look for those points. Now here's some chart examples in a couple of downtrends and uptrends, right? In order to and this is what's wild, right? Is one of the reasons that I don't chase things is because I know very well that, hold on one second. Um, how does a lower time frame channel work? We'll show you that in just a second. Um, well, let me just answer that now. It works the exact same way. This weekend or this Sunday, um, before, yeah, this Sunday, it was the same thing. I remember it was a 1 minute channel that broke and had empty space inside of that channel towards the upside. So when that 1, 2, 3 point hit, I ended up taking a fucking, yeah, I mean, made like $6,000-7,000 on the future thing, but like, it doesn't matter because it's not real yet. But um, that me being able to spot that on a lower time frame, right? And again, knowing that the horizontal levels are the most important, um, that obviously can create or start the potential change in trend. A change in like I was just saying this yesterday or on Saturday. You can have a lower time frame 5 minute downtrend inside of a hourly uptrend that's inside of a lower or a 24-hour downtrend, right? It depends on where you're playing at. And you can make it really confusing by trying to focus on every single one of them or focus on what relates to you or what is important to you. So it may not be, the lower time frame channels that have, anything to do with what you're doing. If the candle closes outside of your structure, that's not really your biggest concern. But anyway, I want to get through this. So again, a mouth is the start of a channel. And this is, again, going to be a wide fluctuation in price, typically completely reverse sometimes. And a lot of the times, if you're going to be creating a downtrend, it will go much further down the first time. But this is one of the reasons that I don't chase after a complete reversal unless something substantial underneath it has broken. And in this case, it did not. How you fell, right? Empty space is also a defining factor. Because as you can see here, you fell really quickly, really fast. This allowed price to retrace really quickly, really fast. And of course, 1, 2, and now we have trend, right? And to my point here, right, on a lower time frame, and this is hard to spot, you can even see right here, there's a little trend, right? There's structure or lower time frame trend as well. I mean, I can see it probably looking something like that. So let's say that at the top there, the empty space has been filled, you've been consolidating in a box, and you have that lower time frame channel, right, established. Seeing a loss of uptrend channels or a loss of control of that channel in correlation with the structural break of the box is something that you could utilize, right? My point here is that the channel is not what gives us the signal, right? It horizontal levels do that, boxes do that, but channels and trend can help us find and establish price targets, as well as general direction that we should be trading. But here in this example, again, you have a wide fluctuation in price. This establishes a trend, right? Same thing here, right? Large leg down, big wide leg up, and that starts to create that uptrend. So we'll go ahead and turn our attention to the charts and see if we can't spot that very same thing. And you guys are welcome to drop a request if needed. And I'm going to try to explain in this example how, right, we can utilize what's possibly on the lower time frame for the higher time frame. So I'm just going to start with what's in front of me. It looks like coin does have, and it takes usually, again, I'm focused on points of contact. So even if that means the channel was broken at some point, I'm focused on this, right? And if I want to be sure about it, or I want it to be a little bit cleaner, as you can see, I'm moving here to the week, or from the weekly down to the 24-hour. and I'm going to do it again. Now, I'm going to take this very same channel, and I'm going to show you something, right? So I'm going to take this and I'm going to drop it right there on the bottom of this little channel. I'm going to shrink it down. Notice it. This is a way that channels could be utilized. Say you've already broken your downtrend. And a lot of the times people think that the downtrend is the signal to the upside. However, I have, and again, seen this continuously, where it's the horizontal level that has to be what actually breaks. And this is a good example of that. So if we were to break this downtrend, that would be by actually grabbing hold of the floor. Simple. Downtrend is broken, right? Let's go down to a lower time frame and observe this a little bit closer. So again, right, this is a 4-hour channel that helps me establish control. I'm still focused and utilizing structure first. But this small lower time frame channel could help describe a climb back onto this floor, punch back through this box by breaking over exactly where it's at right now. So again, I want to emphasize, it's not the, it is a part of my strategy. It is something that is important to establish and find any means of control. Boxes are control, channels are control. So by finding both of these, this is really useful. So larger channels rule the lower time frame channels. Ultimately, yes. If you're, that's, yes, ultimately, yes. This is one of the reasons that even right now, like I'm a little hesitant to be going or doubling down on going short. Because at the end of the day, like we have broken a lot of downtrends, right? And even now are at risk of like potentially breaking those by going sideways for too long. But that's something that would, you know, in combination with what I'm already looking at would be useful. Break in structure, uptrend is broken. This would solidify that what control did exist on the 24-hour is no longer there. All right. So I think for the most part, right, this is pretty self-explanatory. And one could even begin, right, since you're breaking a downtrend, one could even begin to try to find, right, a channel for an uptrend. And again, I'm going to start by doing, this is probably not what most people do, but I am only focused on points of contact. A lot of the times, a uptrend or a classic going like this doesn't really do much of anything for me at all. In fact, it would leave probably the most of that out. So what I typically do when I'm trawling channels is I look for some sort of lower time frame control, right? I can see how you're like in an uptrend there. So I'm going to use that. And hopefully that's, perfect. You see this lower time frame channel. And we're going to keep moving until we, okay, more points of contact here and here. It also adheres to the channel over here to my left. So I could assume, right, by looking at this, that this whole thing is probably an incomplete channel, but is the current uptrend channel for coin, which honestly, it's not the worst setup in the world, because it does have quite a bit of empty space to the downside, and that would be allotted by the actual downtrend itself. So you're still floating in there. But that's typically, I would say that this channel, whether you go up or down, right, is going to remain in play for quite some time, unless that downtrend is something that we fall back into. But nonetheless, doing this is just establishing control, which is a useful thing because I am not in a major 24-hour uptrend. There are opportunities to go short, but they are short-lived and they are tough to hold through. And with my system, if I'm going with trend, that allows me to be confident in holding or trimming and holding positions that I have. Because if I'm going with trend, if we are buying, then that is where the strength is going to be, not on the downside. If we're losing the downside and we've dropped underneath areas of consolidation and closed, then that can obviously be the same thing, but in reverse. You said hymns. I'm sorry. So I find trend with channels, right? Trend lines and channels, two different things. Trend is a direction that something is heading, right? You're trending towards this. Trend lines are hand drawn, random ass lines, right? So a channel is how I define trend, but not with trend. I do not use trend lines, right? So, to your point, right? This is something that, yeah, 1, 2, 3, 1, 2, 3. And on this fourth one, you're starting to actually make a move up. Now, again, this is where I always try and emphasize that horizontal levels are going to be the most important, and that doesn't change, right? You are still up against that wall. So ultimately, if had you taken this position to the upside outside of that structure, you would still need confirmation for the floor up above. Um, let's see here, the weekly. So something like this, right, is not something that I would ever try to establish trend on. However, this major fluctuation in price, because again, we have, maybe some sort of trend, but you've just expanded outside of it. So check this out, right? Let me, and this isn't the easiest thing to think about, but there is channel, there is control. By doing this, you actually create the opportunity to have a much wider or more profitable trend, right? By doing the exact same thing that we saw before. Where we can expand. Now, points of contact inside of a channel can a lot. I try not to leave out wicks if I'm being 100% honest with you. And although that lines up, and this is one of the biggest problems with establishing trend, it does line up. But if we can acknowledge that it lines up here, that trend is no longer relevant, right? At least for now, unless you pull back, then absolutely you would likely tap that. But the full potential now, take a look at that. You are holding that median. So this is a useful area on the weekly where you could say, well, we are absolutely definitively in a box. By losing the 5182 and having empty space underneath me, right? I would not only break the median trend, but I would also likely fall back and reverse lower time frame trend. Now, on the opposite side of this, for 3 weeks, you held that floor. So if hymns can break out, one thing that I am not good at, and everybody in here obviously has to know this, is I am not, and this strategy does not allow for me to play into all-time highs. I can play into them out of a break, but as far as targeting is concerned, I don't have any structure. I don't have any empty space. And so I don't thrive in those areas. But if I am forced, or I am, however, in something that is moving into all-time highs, which you will likely find yourself in that situation, this is something that I will utilize, right? Is a channel-based target. So if I was in equity, or in leaps, again, I'm looking at the weekly chart, and I'm looking for hymns to break up, and I want it above that mark there, I want it above the wicks here, then up in this area of that's $80. Now, if I find a psychological target that lines up relatively close or within trend of here, that'll typically, $80 would be a target. 73 is not a very psychological target. So I would assume safely that 80 would be my target to the upside. Now, I'm going to confuse you really quickly. Now, what's the issue with this, right? We have uptrend, we have new highs, higher highs. But now, in this scenario, what do we also have? Lower highs. This high is lower than that high. That can create trend. So there's also going to be areas, right, of conflicting trend. This is an attempt at control. It is not. Uh, yeah, psychological target is like $80, 85, 80, any whole number, but 85, 90. Psychological or whole numbers, um, will typically actually, even on the option chain, pull more volume than a $73 target. So, what use or what good is it for me to do something like this, right? I know it might seem far fetched, but I cannot tell you how many times I've seen this happen where two trends, right? And what you guys are probably familiar with the triangle, right? A triangle is an attempt at control from both those who are pushing it down and those who are pushing it up, right? Or you could even say passing or handing off that control. So if this cannot, and this is actually why I decided I wanted to try to take HIMS to the downside, because it was making a lower high and it was sitting in consolidation, and I still am expecting for price to break in one direction or another. And today's move up doesn't necessarily pin this as a upside move. That doesn't happen for me until we get at least up to 62. But I can acknowledge now that it would be this wick that would allow us to go up and move and make equal highs, which if you make equal highs in this scenario, I think you go right past it. But because we have a second high and a lower high, and we are in consolidation, I wait. Hands off, and I wait. And I'm looking for a and when you go to the 24-hour, I know that it didn't work. Well, for me, I haven't gotten out of this play because it's just I didn't put enough into it to care. But ultimately, this is one of those setups that you can bank on it to the downside or to the upside to make a pretty decent move. So while you're under the establishment of what could potentially be, and again, this is just you trying to establish where control is at. Are we in an uptrend? Are we in a downtrend? Are we potentially in both? Right? Which is sideways. A lot of the times, if you even go chart a large box, you'll find lower highs, higher highs, all throughout that. So, all right, we'll do one more. So this is a good example of something that could help me, good consolidation, but I also can see, yes, yeah, this will be uploaded. So I want you guys to take a look at this, right? Lots of structure, really tough, to try to, like, you need a floor reclaim. That's period, end of story. You've got a downside 9250 underneath you, but you're stuck in between them. There's a battle going on here, for sure, right? And we can do this. So in this case, I'll start from my lows, go to my highs, and those seem to line up pretty well, right? This is lower time frame control on the 24-hour. What you'll find is that on both sides of box 1 and box 2, right? Any definitive, if you break up, you'd have a target right up in that box here. Or if you were to break down, it has been stuck in range for a while. And I would say that this is, so how many of us have, I've forgotten about target 2. But look at this. It's okay to try, but whenever people like swear off a stock, I'll try target again. I'll keep, I'll keep trying. Honestly, when it comes to a setup that's built up like this, But establishing, right, your downtrend and your uptrend can do wonders in terms of placing targets and defining whether or not um, that downtrend control can break. And in this case, right, we're seeing sellers step up at every single point. So we know that definitively breaking outside of cost basis, which is our trigger to the upside, would break this lower time frame control. So now I wouldn't be surprised. I mean, again, I'm going to stick with my horizontal targets, but I wouldn't be surprised if this channel, while it is still very much in control, includes this structure here over to my left. As you can see, that is also in play. So again, it is almost, borderline a damn indicator in a way, where it's like it's not the most important thing in the world, but it does, especially when I'm in an area like this on target and I have what most people would coin as a bear flag. This is, and I shouldn't be teaching some of you guys that, but this is what most people pen as a bear flag. So in order for me to know that this was actually bearish, I would need a break in trend and a horizontal break of 92.50, 92.89. If it breaks to the upside and it goes through, right, that 107 mark or 106.50, which I have marked as cost basis, that's where we would, again, use the empty space as well, but we would be looking for a confluential target, typically lining up, right, with that box or with that channel. Now, we just found that on the 24-hour, but move out to the weekly with me, and you'll discover that Target, obviously, has been in a long downtrend. Probably you could say established, I would say on April of 2022. Long-term downtrend, right? It's also a good time to find out where you're at on target. Again, it seems highly unlikely that we don't attempt to go and reclaim. It makes total sense when we look at why, right? Why we can't get back up and why that box I showed you on the 24-hour would be so important, right? That's a pretty clean box. Or excuse me, pretty clean channel. And again, right now on the weekly, this wouldn't be something that you're paying attention to all the time. However, if you, again, shrink it down, channels are fractals of themselves. Oh, there we go. So as stupid as that might seem, what I just showed you, I cannot tell you a single time in my trading career where I have not seen a channel that you lost get reclaimed and not go back up. So regardless of where that higher time frame channel pins us, remember, we've been in a long-winded downtrend for a long time. But Target has also bounced from 112 and gone all the way back up to 180. So there's no reason why, with the consolidation that we have and what this floor, I would actually almost say that's confluential, but with this floor and the range that you're currently in, very, very soon, right? If it goes down, fine. If it goes down, it's not really anything that I would want to trade. If I'm being 100% honest with you, that's not my kind of setup, right? Empty space isn't there. There's like a weird gap at 84, 36. I'd rather take it, if it does fall back down, yeah, I would say probably if it lost it, I would only take it until it broke back up above and it would use this box that it's creating to punch through. But regardless, as odd as this might seem in terms of like looking at channels and reclaims of those channels, these things are incredibly useful, especially when establishing control. And again, that higher time frame channel that we just established, perfectly bleeding into this, what you could say is the 24-hour channel, right? So all of these things are pretty useful. So channels provide structure to trend. This is using trend line. Just using trend line is problematic with confirmation bias because you will connect the dots to where you want it to be, not where it's supposed to be, which is why I use a parallel channel in the first place. If it doesn't make sense and I can't apply it to my chart, I don't. Especially, again, for the way that I trade, and you'll have to correlate this with you, but the way that I trade, I'm not. I'm looking typically for shorter move, like shorter 2-3 day moves in empty space, right? So like those, I'm not necessarily taking what the weekly channel has to offer me. If we're fucking $200 away from it, or I'm not really paying. I'm more focused on the time frame that I'm trading on and its channel or its control. If that channel broke or anything of that nature, then I would have to pull back out and look at that higher time frame to help me find my targets. But channels just represent control. Control can be lost. You can divide them and see lower time frame control, basically what I just showed you. You can literally just take the channel that you're in, divide it, or clone it and shrink it down to fit the price action that you're in. And a lot of times that'll help you establish the control, the lower time frame your control that you're in. Points of contact typically come at points of confluence, right? So confluences, and we're going to talk about those next, is where 2 points of data intersect, right? The first point of contact after the mouth can give clues to where trend will go. So what I mean by that is a lot of times just by finding this wide fluctuation in price, right? If I can find channels or find something like a base, let's go back and look at target, right? If I can start, and we'll go down here to the 4. So let me show you what I mean. This is by definition what I'm explaining to you, right? That's a mouth. This is a wide fluctuation in price that establishes trend. Inside of this, I can see 2 points, right? I can already see channels or some sort of control being established, right? This can help, again, just I'm not feeling great, Ivan, but I'm all right. This can help me pinpoint confluential targets, right? So if I have this channel, and this channel does transform for sure. But even if you're looking out into that empty space, this would, again, if I establish this channel before all of this, i.e. something like this, I use this combination with my structure to find confluential targets, which is just me saying that I see this line, right, intersecting with this line. And depending on how you actually get there, right, how long you go sideways, a lot of the times, if I see that, I know that you are literally, yeah, there you go, confluential. But I know that those targets are, you're building up for that break up to that target. So again, I know this is, I'm having a hard time knowing whether I'm losing any of you guys, because this is probably just like autistic stuff, but like these are tools that I'm using, especially when I'm problem solving. It's like some problems are, it's a good setup, but I need to know where the control is. I need to know, okay, where are we at in the higher time frame control on maybe the weekly or the 24-hour. Still keep it up. Everybody good? Everybody following me so far? If anybody has any questions, let me know. Good? Okay. I'm falling over. Oh God. Channels are just a way for us to establish control. That's it. So remember I was explaining to you there is trend in trend. So here's a useful tool that we can use, right, in order to establish, okay, I have a higher time frame 4-hour channel, right? And I've used the inner structure and I found bam, 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 bam. Typically, if you have two off the bottom, that is a sweet spot for finding, like if you have two off the bottom and only one peak, it's a sweet spot for finding a confluential or target to the upside. But in this example, as you guys can see, there is a plethora of points of contact, right? So far, 1, 2, 3, 1, 2, 3. You get multiple taps. You get a breakdown retest. This confirms that the higher time frame. Do you guys see how? Does this one make sense? Do you guys see how the higher time frame? The higher time frame is always going to have the most control. So if you're in a lower time frame uptrend, as somebody who does what I do, I'm going to trade that uptrend. But when I reach that target that we've been talking about, or that channel shows me, and it lines up with a horizontal level, that change in trend will let me know that the higher time frame play, the trend that we are currently in, is still at play. The lower time frame channel guides you up to the higher time frame downtrend, but the higher time frame downtrend is far more powerful. So in order to establish that that is actually going to happen, a break of lower time frame uptrend will lead into a higher time frame downtrend rejection, right? So it's a channel in a channel. Does this make sense? Yes, that does make sense. Absolutely. Yep. Now, again, how useful would that channel be right now? The weekly on target? I think it would be useful for establishing the stronger price targets, which I like your price targets. But ultimately, right, unless you were a investor or somebody who is like literally looking to short target or something like that, like this wouldn't really be, you would want to focus on what control is available or clear to you now, unless there is none, you know. But I get, you could go down to probably the 15-minute on target and find some lower time frame downtrend that's keeping us from moving up and establish where it goes up. I mean, fuck it, let's do it. I don't like talking about it. Be about it, right? Faster. Right. Too fast, too slow. There it is. Yeah. Which is, again, I could go through and double check this by lining it up with certain points of structure or certain points of trend. But regardless, as far as, and this is literally what I just told you, the up and the down. Target is fucking pinched. Target, it's funny that we even gave up on it because that is exactly what makes a good buying opportunity, right? And like sometimes it doesn't work. And if it doesn't work this time and it takes another 3 months, I'm going to absolutely take a motherfucking. Yeah, you guys can send channels. Yeah, go ahead. Um, but this just establishes, right, that A, big moves coming, but B, we are under the control of both. So being biased and not having triggers on both sides is a great way to fail to capture that move. But if you can establish where the empty space is both sides or what trigger you have on both sides, again, and I didn't need to go all the way back on the weekly to establish this. I don't need to do that, but I can tell you what, if I was to expand this, I'm going to have those same points that I had before. Everything's going to typically line up the way it did. So, and that's the good thing about trend. It's like if you are right, you can use that as a tool, right? And so it's not something that you can bullshit. You can't bullshit trend or channels. You can bullshit trend lines because you can put them wherever the fuck you want, which is why I'm adamant about people not ever doing that. It just doesn't make any sense. Let's see. Sure. Yeah, I could see how. Yeah, we got point. I would want to see how that core is. What is this arm? Okay, so let's see if I can't help you with that. And maybe you are on the money, but let's go here. I'm assuming this is what you're doing. Okay, so for me, right, a lot of the times. Okay, good job. I'm gonna go back. Looks pretty good to me. And sometimes the art of creating a channel, it's sometimes you might be wrong on the first one. It takes it, even me. Sometimes I don't like the channel that I put down, and I end up going with one that's more based from the uptrend. But again, I'm looking for points of contact here. So I'm seeing quite a few, right? There and there and there and there. So it looks like this is definitely in play. So I can see why you kind of gravitated towards cutting that out. So I think there's a little bit of a mistake here. So we're going to go back up here, and I'm going to go from that point. Again, let's highlight why am I doing what I'm doing? A wide fluctuation in price. This creates that uptrend, right? A reclaiming of the floor above what's horizontal. This helps create that uptrend. That's it. So 24. So looking back at your channel, I think if you can just tap, and I see why, but it is important that we include, you're starting from here. So let's go to the hourly. So I'm going to do this. Basically what you did, right? I'm cutting out some of the price action, and I'm doing that on purpose, right? Because in the most recent price action, it seems like the majority of the control is, yes, here. But let me tell you this. If you were to break down, right, and you were to go fall, say, under here, you have a gap to fill there. If you start breaking, I wouldn't be able to state, because again, I'm the one who made the chart, so I know what I've done. I would not be able to state that uptrend is broken, right? It is a deviation or a fractal of the current channel. I would expand it, right? Now, the purpose of this, and I think leaving it expanded here is probably suits finding a confluential target better. But if we were to drop, go hit 134.50, there is zero doubt in my mind you would hit that mark. Not a single doubt in my mind. Even by the way that the under what is under you is constructed. Like, take a look at this. You got a weird gap right there, floor there. So I don't see any reason why, if again we have the same to the upside, you could be looking at the 153, which you'd have to find as a confluential target up. So technically, this is the floor you've lost. Yeah. I mean, that's and where you're at currently. I look at what separates you. Look, seriously, this is attention to detail. What is really in between? Now, there's some green candles like here, a little bit of 150 psychological number. But otherwise, from here, where you're rejecting, to here, there's not much of anything. So we could expect that price moves relatively fast, especially from 145.50, excuse me, to 150. See that pocket right there? Again, attention to detail. that's where I would be looking for that price to move quickly, which would then play into the channel. All right, let's see here. So I like the points of contact for sure. Doing that on 24, yeah. So this is actually one that I think really works or fits. Let's see, we're focusing on points of contact. So anything like this could be useful, beautiful, very good, good, great. That is your whole trend. So this is actually, again, why I try not to exclude the wicks. On the box, maybe. In this case, not so much. Hmm, curious. Yeah, so I mean, I think this is definitely something that is going to be useful, especially if we lose this level. Like right here. That's where the targets to the downside would definitely be in the comp. I mean, shit, every single target you have, especially there. So again, in the situation that we were to fall, right? We're not right now. We haven't yet because we're well above where we need to be. But let's say we did, and tomorrow we should be expecting a retest of that fucking mark. But if we fell now and we start breaking, right? This level right here has been very, very important as a hold and as a floor. So I can expect that price would move pretty quickly down, right? There's a small punch back here on the 4-hour, hourly, and that should, by all means, give you a move down to that 5,756. Of course, you have a small gap down there, and that would also. So, in the scenario that that did occur, and I'm looking for a price target to the downside, I'm already in. I've already taken the position. I have a 59.33 stop loss, and it's melting down, punching through this box. That especially this for runners. Like runners on in channels, like if the channel holds or responds, I'm not holding through that. But that would make a great place to look for a prior profit target in this scenario. If we're moving up, again, all we have right now is all-time highs, which is currently well above where we're currently at. But if we did break that, I would be utilizing the channel as well. So you did this one today. Let's see. Try to make sure that your higher time frame otherwise, I mean, I see everything you're doing here. If your higher time frame boxes are bleeding into your lower time frames, you can go to the higher time frame and you click on the actual box and you go to coordinates, or excuse me, visibility, and you click the actual time frames you want that to appear on. Just if you want to clean your chart up. But let's see. So I like that. I definitely the wick gives you the points of contact that you need, and that would be something where, yeah, if you break this floor right here, which you've already tapped off of the structure, if it's, I mean, that right there, if that's a solid target, that would be confluential. Otherwise, yeah, this channel looks pretty good. Okay, so this is, and I zoomed in really quickly to show you guys or give you guys an example of what that looks like. It's actually, hold on. When I made this course or when I made this workshop, I hit this trade. I just remembered. I took that sucker and it hit perfect. And then it failed and it kept dumping. It was actually really, really crazy because what I'm highlighting here is that if you're long-term investing, If you're day trading, if you're swing trading, all of these channels, right? Whether it's the 4 hour channel to the upside and the 24-hour downtrend, or if you're trading the hourly downtrend, right? Looking at where you're at on the higher time frame and saying, okay, well, we keep making lower highs. We have 1, 2, 3 off the top. I've got a big ass fucking leg down here, right? Channel based, beautiful points of contact here and here. And so, again, this is something that did end up playing out. Not to mention, it had a box underneath it. This did keep coming back down. Yeah, no problem. Uh, but this is just the fractalization of those channels. So I can use, like, let's say we wake up and we're like, all right, Tesla has been, it has given us, come here, you little shit. It has given us multiple rejections off the top. I know that we're in that downtrend and that we hit it. So trend is always true, right? We're hitting that rejection mark. You got a box here, right? You got cost basis right there in the middle. Look how it all lines up, right? Tap, tap, tap. You come back up to test cost basis, tap. This establishes that third rejection. You have your floor here. You gap down underneath it. You wick it, retest. We end up falling into that gap over here to our left. And again, these 2 points of contact give away the channel. They give it away. And so I'm able to place that target down at I think that was around 233, which also correlated down with the top of the box over here. This just allowed me to take that trade. So top-down analysis is going to help you establish and find these channels, right? Knowing that you're in an uptrend on the weekly is important, but acknowledging that maybe perhaps on the 20 or on the 1 hour you're in a downtrend. How can we use that? Well, when the 1 hour downtrend breaks in the higher time frame uptrend, because the higher time frame is far more important, that's likely going to be the signal up. And if it correlates or it lines up with a box, or a box is directly outside of that breaks and it reclaims that floor, you have even more confirmation. One of the issues with people who take trends is they watch trend go up. But in the example that I showed you on Target, right? That channel might be up, but what it has to reclaim is ultimately far more important. So once you have you could use this I used this to scalp the fucking 30-second. The 30-second. And again, I don't do that, but I was doing funded trader shit. I don't like how that makes me. I had a moment of reflection today. I do not like how I feel. I actually was like kind of felt a little bit off today, because it was like, even though I passed, or well, technically passed the funded, I don't like how I feel afterwards. I don't like wanting to, like, I like the reward system I built in my head where I'm patient. So much emotion. And this is the reason that I mean, fuck, every single time I've done it, I've failed. If I just scalp, I fail. And it does, but it feels more like a game. Like, you ever heard of having too much fun? It's like that feels. This is just me, my experience. There are different people, different. You might be stone cold Steve Austin, dude, and you're better than me. I hope you are. I really do. I hope you guys are. I hope you guys hit the funded trading thing. You know, um, not to say I'm not going to pursue what I just did. I mean, fuck it, right? Might as well. Um, but I don't like how I feel trying to. I mean, I'm doing everything that I'm teaching you guys, and I'm doing it to the max. I'm drawing channels, drawing boxes, finding empty space. And when I tell you that futures are closed, right? Is that how that works? That's how unfamiliar I am. They're open. That's right. Yeah. So like I'm down here on the 15 second, and everything I just told you guys, everything I just taught you guys is true. But now I have to be the fucking fastest at it. Cost basis, right? Where are we closing underneath? That wall. That's what that fought for. We're sitting on the bottom of that channel. What's underneath me? Empty space. What's holding me up? That wick. Where's that wick at? That's an old cost basis. So you dropped it in the top of your box. You're trying to hold yourself up. If you lose your old cost basis, your floor, again, the box is, you guys are correct, it has been broken through, meaning that it's no longer valid, but its floors and cost bases are all price targets. So that would be a trade down, but I'd have to sit and fucking wait for it. And then again, this is the 15-second and after hours. It dries up. Also, this is crazy. I don't know why, but the NQ is so much better. Yeah, the NQ. I mean, look at this is the 15-second. Look how much better that is. That's crazy. Same thing here. Oh shit. Oh shit. And we're gonna hit that. Yeah, same thing here. 15-minute downtrend. Bam. There. Channel target down 21 right here, 21 152. That's also correlating with this old floor that we've hit and basically where that wick comes off of. So if you clear that wick right there, my stop loss would likely be set, or my entry, because again, when you're scalping futures, you have to come. I would much rather take a rejection off of something. But yeah, and then beautiful right there. If you split any wick in half, but all of, like, think of that. I have to think of everything that I fucking know of right now. Imbalance on the wick. Like candle close, empty space, but like that's exhausting. All for a fucking drop of blood. And like, well, I can say, like, if you fund your own shit, that could be dope. You know what I mean? I find it interesting that when you started trading futures, you reverted to scalping instead of playing it like Spire or the higher and higher. Dude, honestly, because of, and this is how it's so different, right? I could enter right now, bam, short, and I'm already up $800. Bam, it hits the floor, boom, which goodbye. Watch the wick right there. Look at that. Ugh. Now you left a gap down there now, so that inevitably is going to get filled. Yeah, they make you scalp. Basically, yeah, you are right. They make it so that it's a, yeah, you're using a ton of leverage. So it's just like, for me, being able to put $400 or $500 into a play and wake up and it's, $4,000 or $5,000. And maybe I'm lazy or maybe I'm just spoiled, but it's like, that's to me is freedom. This to me is like fun. Or if I had to do it for real, this was all I had, my only chance is success. Dude, I mean, it would feel fucking, is it? I did a RTY. I noticed the leverage was different on that one. So yeah, but I mean, also the positive though is like I can spot these moves. You know what I mean? Like I can see them, but it's like, dude, I mean, you have to be fucking lightning fast. And I'm saying all this like I ended up struggling because I made too much money. But that was the other thing that I didn't like is like, dude, I'm trying to show you that I know how to capture good fucking setups, and I did. But it was like at some point, you know, I want to be able to just let it rip, capture what the chart shows me, not what the prop firm only allows me to do. So get down there, dude. Look at that thing. Damn, you could have been scalping this trick. Look at that. Bam. That's a money class right there. Bam. Look at that. That's top dollar. That was pretty sick, actually. But it's cool. It's cool to be able to go down and know that what you're looking at, right, is the same from here to there. Now, is a 15-minute channel meant to hold? Probably not, right? It's probably going to collapse. It's probably part of something much larger that I could find by just expanding. Do that. But you get what I'm saying. So lower time frame, 15-second control. Oh, no, take that back. Was enough to be able to spot a play from here to there. And that was a confluential target that I found over to my left. So if this is true, if what I just taught you and showed you live now, right, on the 15-second is true, it's true for sure on the 24. It's true for sure because you're moving little money right now. You're squeezing out little money now. When you have billions or millions holding something back and 20% of the float is short, come on, man. And you're in consolidation, it's money. So everything that we use on this higher time frames can be utilized all the way down, right? All the way down to literally what most people never look at. The 10 to 15 second, all of it. The boxes stay the same, all of it. So that was pretty cool to be able to show you guys that live. Oh, you know what? I was just saying, let's not do that. But look, do you remember that 15-second channel? Check this out. Wow. Now, multitude of rejections. Can you chart the microsecond chart? 1/10? I mean, I probably could. But now, right, one could be speculating based on the fact that you've got multitude of rejections here, multitude of rejections here, that perhaps overnight we should be looking at a move down to 222. And you guys can check this price tomorrow to see if I'm right. But that's what the channel's telling me. But it also tells me, right, let's say I'm wrong. Damn, that would have been a nasty short. Should have taken that. Some of you guys could have been making money on futures, I guess. But let's do this, right? I can just know that if you break above that high, you're likely going to go, yeah, I know. Are you guys, are you trading this? I mean, but seriously, now that I have this channel established, now that I have a multitude of points of rejection, right? It increases the probability of this trade actually working out. Now, I'm going to do something really quickly because I don't want confirmation biased and I don't want to be wrong. So I am here and here, but I'm leaving out that point. So I'm going to go from here to here. And what seems to be true is that that little 15-second chart that I showed you is right there. Super tiny. You would never even know that it's fucking there. But it's in there. And so now you can say, I'm going to go with the points of contact. At this point, right here, would be your upside outside of 21 or 22, or excuse me, 221.82, right? That would be the target directly outside of that. And that has a lot of resistance overhead as well. And then again, to the downside, where we would have, and I'm going to go out a little bit. Beautiful. Where are we? Hold on, before I do that. Where are we? So I'm looking over to my left because what we're holding on to is what we're going to bounce off of. I don't have anything clear yet. Hold on. 4-hour prices right here. So you're holding on to that level in particular. Is that true? That is true. And your last candles were holding 22. So it's here. It's that right there. That's holding you up. That's what you're trying to hold on to. This, theoretically, is keeping you down. Or, damn, that's fucking money. And the target to the downside would be here. So let's go to the hourly. So if that's the target, one could speculate that you're going to keep fucking going sideways. Instead of going up to touch that target, you're going to keep going sideways potentially, and then you'll drop to it if it's going to happen all in one move. And that would mean that you're probably going to end up bouncing. So watch this. I'm making a prediction so you guys could potentially see how using this channel, and I would watch this, going into tomorrow. But look, we're going to probably bounce off those wicks. And if you hold and sustain price like how you did on target, that target down here will become confluential. So it might not happen now, right? And that'll typically, you can see price action doesn't even really appear like it's got the momentum to do that. And why would it? So perhaps overnight, right, or going into tomorrow's open, we'll open up in that same range, and that'll be the inevitable outcome there. So, all right. Pretty cool. I did hit record, didn't I? Okay. Yeah. Yeah. FOMC meeting this week, so that PA is telling us something. You are right. Ooh. Tomorrow? Okay, then we're off Thursday too, right? And then we got to, oh, dude, no, fuck that. I'm off Friday. I'm not trading Friday. Hell no. Unless the setup is absolutely crazy. I am not saying, but okay, so we have Thursday off. Yeah, well, I'm wondering if we'll start to see movement tomorrow by the ones who know. But man, we are consolidating. I mean, shit, is that not? Hold on. That's enough to make that move tomorrow, or I mean, shit, if you can cook long enough, that could definitely happen. Yeah, Wednesday. And I mean, so let me tell you, and this is something that we didn't necessarily go over, but with economic calendar, when we're going into it, it is set up first. So like going into FOMC with this kind of setup, I'll put money into it, right? And the reason that I'll do that, or the reason that I'm willing to speculate on certain things like this, right? Now, first of all, I think the easy answer here is just to say we're we're fucking we absolutely have the potential to come back down, right? With FOMC, like this is you could start mapping out where you're at now, prepping, right? And it's those who have a plan that outlast those who don't. So if you have a plan and you know where you're at on the map, a lot of people, I would say the majority of people have no idea where they're at. What needs to be held? What is likely to be bounced off of? None of those things. So FOMC's here, right? If you lose that wick, yeah, we're coming back down. And the fact that you're sitting on this floor, right? That's also equally important. Now, I find this pretty interesting as well. Check this out. Man, the system can't get the top, right? So if you get a punchback, let's say FOMC, because for fucking some reason, man, and I feel like I had a dream about it or something, but it's like I feel like Trump needs so badly to have the market at all-time highs. Like, and I don't know if again, I'm not in the belly of the beast, so I don't know how information is exchanged, but the buying feels artificial. It feels inserted, you know what I mean, and then liquidated very quickly. So um, I have to be real. Like, there's part of me is like when I hit major resistance like this, I'm not necessarily always looking at the economy but looking at the data points, things are looking bad, are looking worse. And so, with all of the news and stuff that we have, and where we're specifically at in the market, it's like I wouldn't be surprised if he did, but that's what we have triggers for. So we can think that, and shit, you could have a whole theory on it, but then you go to your charts, and that's where you typically will validate, right? That so you can feel however you want. It could be the same thing with biopharmaceutical. You might believe in that company and what they do, but I would look at the chart first. All right, pretty good shit though. If you like. Little confluential right there, right? So again, right, a stat really, really solid control. And I actually get really excited when I see this because it's the break out of this control, right? That gives yeah, that gives us those bigger moves. Look how beautiful that is. Holds up no matter what. So all in all, it does seem when I look at this, you can just say there is overhead control. When we get to that top, they dump. And a lot of the times this can create weakness inside of an uptrend, right? When everybody's buying and it keeps falling down. This can also, if sellers keep stepping up and they can't push you back down, which is how they can actually set it, the market can go up they could gamma squeeze the fucking market up. How there's a lot of different ways to get the market up and liquidate people. And that's probably one of the easiest ways to make the market go up is to liquidate those who are trying to make it go down. Um, and so, like in this case, you might have the whole fucking world trying to short the U.S. economy. But if one of these institutions liquidates a vast majority of them, we're moving back up. And that's what the ETF all time high rip sounds like to me, But again, this is whatever. All right. Now, as far as this example is concerned, trend and trend, are we following here? Because this is going to be your homework tonight. I want you guys to go through. I want you to go to the weekly, the 24-hour, the hourly, and I want you to go to the 5. And on every single one of those, I don't want boxes. I don't want anything else but channels. Okay? One parallel channel, that'll do. I can't find that stock to look at it. Why is that? Tesla or NQ? You do not have all of your data. So when you have to go to your account and billing, I'm probably about to dox the shit out of myself, but whatever. I'll sue you. Oh no, my debit card. So these are the data packages that you should be or you should have, right? This one is these are not. I don't have these. It's just the ones with my debit card next to them. CME, CBOT, this one, as well as the NYSE and NASDAQ, NYSE, ARCA, NASDAQ, GIDS, OTC. Shit. Calm down, buddy. That's my Cash App card, dude. I don't connect my big money card to this shit. You try if you want to. Shit, I'll get you. Actually, speaking of, can't delete this payment method. Why? Because I don't use it anymore. The thing's expired. Anyway, you get it. So make sure that you have that. If you don't have that, then you can't see. You actually have to buy them. I mean, you could technically get a Top Step practice account to see futures, technically, but that's not important. Chart individual stocks, which is where really the money is at right now. Individual stocks have better setups than the ETFs. So the weekly, the 24-hour, the 1 hour, 15-minute, and the 5. Did I say that right? Yeah. And I want you guys to, I'm pretty sure you can view futures without the packages. Just, you might be right. Yeah, that's true. Mhm. All right. Trend in trend. So if a stock is moving, it has control. Okay. So that pretty much if you're looking at something somewhere, there's some form of control. And again, this phenomenon appeals all the way down to the 1 minute, 15 second. Again, how low does this go? 1 second. Everything is the same way, right? From the 1 second on down. Channels exist. So if we know that that has to be a tool. How am I charting this right now? Look at this. Ugh. Disgusting. Imagine trading on the 1 second. Holy shit. Diabolical. All right. Yeah, right. Now, I kind of went over this, but I'll go over it really quickly again. Within parallel channels, we can use the previous channel and stack it on top of the other one. Channels like boxes or fractals, so you can keep dividing them, and oftentimes you'll find your lower time frame downtrend. And as you can see in this example, right, there's multitude of different trends. You might have been following this one, and then it breaks and it rips. It creates a wide fluctuation in price, and all of a sudden, we have trend developing again. But had that ripped, stacking your channel on top of one another would have obviously given you some pretty serious and solid targeting, right? And this whole channel, right, while it chopped up here, did its thing there, you had a punch back through it, all of it stays well contained. And this is NVIDIA, which pretty cool when it comes to control. It very heavy institutional control, which is another reason why I know some of you guys like it. I stay with stocks that have that type of volume structure. Microsoft and Apple and stuff I don't typically gravitate towards, but stuff that has good control is institutionally owned and does move. So I need to get it in the know so I can start making some bread. Listen, I get it. I know that's why all of you guys are motivated to be here. But remember that excitement, we need to also be excited about being really good and being really proficient at our problem solving skills and our adherence to the strategy, because that is how the money is captured, right? So in the know, yep. All right. Here's just another example of stacking. And again, if a stock is moving, it's in trend. Traders who utilize just trend lines typically look for breaks in trend, not to signify in trend to signify change in trend. This is not true. Tracking channels is a focus. Stacking channels and a focus on boxes typically provide accurate confluences. Just as you found uptrend, you can use those same tools to find potential downtrends and use those structures to find triggers. And all of this is obviously important when you're problem solving. The more tools that you have that are straightforward problem solving tools, the better. Now, parallel channels, remember I was just talking about with Target, right? And this is something seriously. I know I'm teaching you this now, but go set your alerts on this, because I want all of us to see, right, when this does happen, because I don't expect it to be an if, I expect it to be a when. When this channel is reclaimed and you have that confirmation by being above those candles, I fully expect for Target to reclaim its floor, which is above 105. I also expect target to move very, very quickly to that 113 target. Good job, by the way, marking that out. I saw that on your chart, right? Funny enough, God, I love the system. I love teaching when you have a good fucking curriculum, a good strategy, man, because everything lines up. And the more that you do this, the more repetitious you are, you will get better at identifying this stuff. Um, so anyway, when target climbs back up into this channel, I fully expect for it to do its job. And typically when you find your channel or you reclaim a channel, that's something that's to be expected. And the same thing here when you're falling back in. Now, this is a phenomenon I have noticed, again, the same way that I noticed it with the upside. When you fall back into a channel that you've broken out of, typically it's going to represent, right, my strategy, which is, oop, nope, go back. Nope, okay. Lost. There we go. Whew. That gets scared sometimes. Would a stock like Target be better played by equity or options? Long-term options, but there's a time for everything. There is a time for everything. At some point, you could have played Elf with equity with options. Full send. But where I bought it, it made more sense for equity. Um, Target will go through a season of what provides a long-term leaper or a leaper is somebody who buys options going out months or even years sometimes. Um, what what provides a good setup for them, right? Or while you might have a season that provides a good entry for them, Target will provide. And I'm going to go ahead and point out where that is. I fully expect, okay? So let me show you guys this and hopefully this makes sense. I should make you guys do this, but I'm going to show you where weeklies play. Okay? That's an opportunity. Would I play weeklies right there? 100%. Why? Because of one fucking simple rule that I live and breathe. Empty space. There's nothing to stop you. So if there's nothing to stop you and price has just moved through what? A box. Then the volume within that box should distribute the volume evenly up to 112. Follow me here? So that is an ideal opportunity for a shorter expiration contract. I don't need to be dealing with resistance with shorter expiration contracts. That's how you lose. I need no resistance, which I can find, right? Now, let's also do another little mental study here. This is not what I would call your quintessential empty space, but we can qualify close enough to know that this small box, if we can move through it, there's a good chance, right? Very good chance that you will come back up and test this 120-150 floor and of course that 122.81. So I might take this play outside of 102 and aim for 121. And that would be an ideal entry, right, for target at this point in time. This is why I also have learned to hop off the tee. All right? Eventually, it's dry. You got to go find a new one. Tesla taught me this. Tesla beat my ass right after it would fucking give me a BBL. I mean, seriously, it was beautiful. But then it was a nightmare. Don't worry about it. It beat my ass after it gives me a BBL, right? Because you get rewarded, and then you get it. Okay, anyway, you get it. Big move up, right? And I knew that that's the opportunity that I wanted to take. A big, beautiful long. There you go. It expands, it does the crazy shit, and it goes fucking crazy, right? I when you start like and it's hard to pull yourself off of it because you just got through making money on it, your mind is stuck on it, and a lot of the times I get kicked off of a stock, right? It's like I'll try it that last time, I don't put a lot of money into it. I'll it's like a last, all right, well, there's a little bit left on this and I'll take that trade. That's I've learned that after, especially after 3 days, right? I would encourage all of you guys to go and back test this because as a general rule of thumb, I know there's one, two, three within channels, but I mean seriously, I'm not even lying. 1, 2, 3, consolidate. 1, 2, 3, you back up, right? Like there is movement wise, right? Especially after the break. 1, 2, 3 after the break, right? So there's a literal general rule of thumb: 1, 2, 3, and you stop. I think I've gotten fucking Tesla figured out, dude. Which what I figured out is that you hit it and you quit it. I did slap target shorts, yeah, a long time ago. You hit it and you quit it, right? Tesla does this, moves down nice and juicy, you get out of there. Find a new one. This is why every time like I had more people asking about Starbucks after I hit this play than I did before I took it. Hey, do you think there's anything left on Starbucks? I'm like, what are you, a fucking buzzard? Looking for scraps? You're looking to be the one who catches the fucking meat. You don't want to be the person who's trying to like pick up the scraps and look for what's left. Or is there anything left? Yeah, you can say hyena too, right? So, I mean, again, you could look at this as well. 1, 2, 3, third day, you start the torture chamber, right? First takeoff right there, you get 3 candles beyond that, but I mean, that's 4 candles. 3, 4 candles. And again, this is just something that you guys can, go look at yourself. Go look at whatever stock, look at the snow. I don't know why that comes up. And go look at how snow moves. Already, immediately when I looked at this chart, you know what I just noticed? 2 big fat candles. Immediately. Watch, I'll show you. This is exactly what I just saw right when I looked at the chart. 2 candles. 2 candles. 2 candles. 2 candles. When it expands, look. 2 candles. 2 candles. We'll call that 3. You get a lucky pass. Simple observations, but this is something that 2 to 3 days of running. And what I'm trying to just say here is that once you have a good play, you better have everything you need set up on that, because if you miss it, it's over. It's over. And if you do hit it and it works, it's over. Starbucks, over. And it's wild to me, yeah, that people are like, yo, does this have anything left? What about down? I'm like, when has Starbucks ever just really ever made an immediate rejection off of anything? Right? Like an immediate, like, boing, and then just flat right back down. Look at what Starbucks is doing. It's turning into a box, which it's expanded and it contracts as it should. So now I would say I could envision. Wouldn't that look more realistic? Oh no, I just stopped talking. Yeah, I was gonna do a deep discount, which is actually something I have a surprise for you guys. Well, it's not a surprise, but if you have attended this class, I will make sure that you guys have 45% off anything. Because if you fucking show up and you put in the work, even if you couldn't make it, you get feet picks and 45% off whatever the fuck it is. Whenever you want it, if you want it. That's lifetime, that's yearly, whatever you want. You show up, you fucking put in the work, you get a fat Fat ass discount. All right, Junior. Listen, don't call me out because I procrastinate. All right, I know that. Yo, feet pics, I got lifetime, so I get them for life. Oh, that's fucked up. You kind of changed that around on me. Actually, I just looked, and Ivy just said that your lifetime has been revoked. Damn, that's crazy. Oh, just kidding. Show me them dogs. Peyton says my feet look like Barbie feet, like Ken's feet, because all of my toes make like a perfect angle around at the top of my feet. So, it's coming in hot. I haven't even made the code. We'll have I'll do that later. But there you go. Yep. There you go. But seriously, you guys show up here, you do the work, yeah, 45% for whenever you're ready to sign up. Probably like tell Ivy to put a year on it or something like that. So, or if you know somebody else who's hardworking, pass it to them if you already have it or something. I don't know. But anyway, back to what I was saying. Doesn't this look a whole hell of a lot more realistic than just going immediately back up? Yeah. Show up and do the work, it pays off. So yeah, looking at, and I don't know why what I just drew looks so damn good, but I mean seriously though, expansion, contraction. Once you got the expansion, you get out and you wait for the contraction. And most of the time, it's just people's fear of missing out on whatever could be the next trade instead of going out and finding the next one, right? Instead, go out and find the next one. You're stuck on this one particular play. It's almost like hanging on to a good feeling forever. It's like a friend who you were, drinking and partying with at 21 comes over when you're 29, and he's like, You remember when we did this together, man? I sleep on your couch?" Like that's exactly I've had that happen. That's exactly what you're trying to hang on to a memory. It's over with. Let it go. That friendship's over. All right. Can I borrow everything? All right. I just got through talking about this. Typically, again, I think this is just yeah, milkers, if you could spell borrow right. Are you gonna borrow my bank card, dude? What does that even mean? Otter has a life example for everything he says. I'm pretty good at metaphors, dude. um, so another thing to mention, right? When lower time frame crunching or constrict, like again, right here, let's go ahead and look at this really quick. You'll notice right here, there's a box. And there's a box here. Right? So what we're learning, what we're doing is no, you're good, man. I'm messing with you. Um that's for letting Wesley kill me the other night. That you think I forgot? So what do we have? Two boxes stacked on top of one another, right? Structure, consolidation, and they're in trend, and that trend expands, right? This is again where we typically look for those bigger moves to the upside. So having that tool or having that channel and then stacking one on top of another, again, this is all mathematically sound, right? This is the exact same size all the way across. So by stacking that channel, I also give myself the opportunity, oftentimes, especially in all-time highs, to place a target on the chart. Okay. Now, always focus on your trigger over channels, right? You will have to leave the channel. You will leave a channel to hit a target, and this is an important slide here Because just because a channel is broken, just because you think the points of contact are done, you will pop out. You will hit what is most important before you return to what is currently controlling you. Why? Because the volume is here, right? That's base camp. And in order to make this thing go down further, we got to go back here, grab that volume, and use it. Look, drives you down. So, and that's it. And I know I probably went over this a little bit too much, but channels are something that I use a lot, but they don't make or break my trade. So, does anybody have any questions? I know we were pretty much answering and going through charts as we were working through this. If not, we'll go ahead and move on. Can you have a confluence with absolutely, or just no? Absolutely, absolutely. Confluences can exist everywhere. Here's an example of an older cost basis, right? One that we had already punched through, lining up with that potential break-in trend. Now, the cost basis unfortunately doesn't tell us for sure that we're going to continue moving down, but we know that if that floor is lost that originally got you up, and that's the volume that got you up, and now the volume from that box is gone, it's easier to punch through. And so by punching down, losing your uptrend, yes, right? For sure. Confluences is our next subject here, and we're going to get started on this. Where data collides, all right? Confluences are where two sets of data cross, providing the same buy or sell signal. This can be applied to trend or the Potter box, or even indicators and key levels, which I'm not recommending. But yeah, your moving average could line up, right, directly with a target that you have on the actual chart. Cool. Right? That's a confluence exists outside of just what I do, right? A confluence is just where two sets of data collide. This is especially helpful in trend, as we know that in order for that control to break, a mechanical trigger must fire. Confluences should appear naturally, not through confirmation bias. Influences help us pick targets, right? In the example below, we can see AMD in trend. We can see the top of the box below and trend cross, the green circle below, right? That's my target. Above, using the structure nearest above, we can see if a few triggers are broken, that cost basis above here would be the most likely target in that range given the volatility of the stock at hand. A stock that moves 0.75 to 0.50 to 0.75 cents a day should be considered when placing targets, right? We just need to know if that stock it moves like a dinosaur, right? That's going to correlate with our contract selection and how and where we take that trade. We know that structure and imbalances broken will send you to your next level of support. That in itself is playable. So if you are in confluence with trend, this should strengthen your conviction as a high probability target. My point here is that if my channel lines up with my box that I'm targeting to the downside, that's it, right? Doesn't need to be complicated, but also that 1, 2, right? 3. So if by chance this was to occur now or in a shorter period of time, which obviously not, then that would be our nearest confluence. Now, is that something that more than likely is going to happen with all the structure up above us? Probably not. You're more than likely going to go and tap something solid like that confluence before you curl back up. While lower time frame and day-by-day analysis is needed for swing traders, confluence can make for take profit targets or even contract selection. So if I have a channel and the top of that channel shows me my target, and my target is 80, and the bottom of my box is 80, and empty space is there, what do you think the right answer is? Right? Probably an $80 or some contract that's gravitating around that. Every time frame and channel usually will present this opportunity. I'll repeat that. Every time frame and channel will usually provide this opportunity. Now, I sure as hell wish that I would have left what I had on NQ last night up, and I even told myself to do it because I just wanted to give people an example. When was this? Kind of hard to find a fucking 3-minute trade that you taken. Is it down here? I think this might have been it. That was it. Okay, so again, this is the 30-second chart on in or 30-minute chart, excuse me. 30-minute chart on NQ. Um excuse me. Now, the breakdown in itself, right? Consolidation, wide, again, channel, wide fluctuation in price, structure, right? And not only that, we have a pocket of empty space directly underneath us. Now, that would only occur with a move through this, which you're sitting on top of it, pulling the volume out of it and refusing to use that volume to move higher. Price eventually fails and falls, losing that floor. So, say you decided to take a short. You're looking for the punchback and you want that target, which I'll be honest with you, I have found in my short futures career that those little pockets of empty space are where trades are oftentimes the best. I mean, that's where a lot of the times it just does it. It just poop pop. And I mean, yeah, yeah, was it yesterday or had to be yesterday? Uh, because you can place where to TP and where to trim, you can set buys, like it triggers an order. It made it really easy inside of like a small pocket of empty space. Like I could show you guys an example of this right now. Like for example, now I feel like that's gonna bounce. Yeah, that's gonna bounce. So like for example, I'm looking here on the 2-minute. I'm going to the 30-second because I need to find my structure. So I would likely take a trade. I was okay right there. I would likely take a trade right there, right, coming off of the top of that structure, and be looking for this little pocket. I see this is fucking sick as fuck. It's like I'm trying to teach you guys and it's doing it. It's kind of cool to have that example, but I can see that price is going to likely move quicker through that. This is honestly what I have found is the easiest with futures is these tiny little fucking pockets of space, and I'm slamming. Like, look at that. I mean, does it get more perfect than that? Empty space, fat. As a futures trader, it would be like, that's all I really care about. Give me that. Give me this. That's where my trades are, right? And sure, you might have an imbalance here and there, and trading inside of range is not good. But wait, once you have that break in structure, wait, didn't I just say this? No shit. Yeah, look at that. Damn, we did we just do all? Yeah, we did. We just did all of that. Holy shit. Hell yeah. Did anybody take that? Dorks? Sellers? Channel collapse. Look at that. Right on the third. 1, 2, 3. Now you have empty space up, and so if you break up above that mark there, and then this is my point here, right? This is why you trade in empty space. Watch. Already. Already. Expansion. Fill the space. Oh, you don't have to be trading this right now. Just learn. It is far. Listen, most people run straight to the money. They go straight after the money, and they never learn. It doesn't always feel good to sit behind. It doesn't always feel good to study on the sidelines. But, you know, it pays off. This is a great example of what I just told you. It doesn't matter what time frame you are trading on when you expand and you hit structure. This should be all the proof. I mean, you can look for more if you want. But this right here, that stop, again, if you had take it bam, bam, and you left some runners on there because you want to try to see how cost basis responds, cool. Let it rock. I would take a short, probably if it climbed back down underneath that. If it rejected this or went red, I'd take a short back down to the imbalance and to the red wick. And you left a gap behind, so that should go fill it right here. Oh my God, bruh. And look at that. I just looked away for 3 seconds. Pretty cool. It's pretty cool shit, guys. All right. So I know, but honestly, it's like so everyone should open a futures account. I'm not telling anybody to do that. Okay, listen. I've been doing this for fucking 4 days, and it's worked. But it's also like I'm just doing everything that I do. Like it stresses me out. I don't like how I feel. Like yeah, I don't know why. It's like, dude, I'm getting fucking high. You know what I mean? Like listen, it doesn't. It is good, but here's what I think. I think that if you could take $200 and you get a net, see, look at that, bruh. Come on, get fucked. I just took that. Sorry. In class, bad teacher, fire me. Anyway, if you have if you were to take $200 and take an options trade overnight, and let's say it was 1,000% trade, well, guess what? Now you can buy 4 or 5 of these funded accounts, and if that's what you want to do on the side, fine. But I can tell you this: it was really tough to switch my brain back. Right? It was really tough to switch right back. So I did pass the account, yeah. The only time that I found myself struggling was when I got lost in the sauce and I started trading in higher time frame bullshit. Everything that I teach you guys is true, right? As far as like, dude, if you're in empty space, what do you have? What do you have? You have the ability to move. Oh, it killed me too, bro. You got to zoom out and be patient. And this is proof. Market closes, you've gone through your rotations, you've hit everything that you needed to hit, right? And you have nothing but empty space. A funded account is literally where I'm going to say it, but it doesn't mean you need to do it, because what most people think of when they think funded account is a cheat code, a fast way to get. But listen, even in my shoes, I have like it's been wild. It's taken everything I've ever discovered, everything I've ever learned, and turned it up to 1,000. I have to be doing everything all at once. Now, I feel good about it. It's a prop firm, yeah, but I feel good about it. I feel like, whoa, okay, cool. Now, if I didn't have confirmation that what I do works, I certainly fucking do now. You know what I mean? So, it is a prop firm where basically you pay for a large account and they quote unquote front you that money, right? Or not front it to you, but you're trading on that capital. The honest truth is that none of this is real, right? Long that shit. None of this is real. Most of these brokerages, you're just buying and selling, and like these prop firms do not make money off of trading or anything like that. They make money off of people failing. They make money off of having tough rules. They make money off of questioning your payouts or your consistency. Following account straight up. But listen, if you wanted to do that, if you wanted to try it out, like for me, dude, like I don't. It doesn't. It's like I could try it out if I want. I could do that. But if you want to try it out, you should probably make at least $1,000 first with options. Yeah, it is a game. That is a game. It's a game that I have, I think, a pretty nasty edge on. You know, they can deny your payouts. Yeah, like that's the problem with me. Is earlier today, I actually placed um on I had a 100K account. I have three funded accounts. I placed a short on it, and I thought I put myself in a good position. Right, I thought this is right before I hopped on. That shit wicked me out, blew the account. I didn't set a stop loss on it, which is my fault, but blew the account, right? And then ended up doing everything that I wanted it to do. Whereas if I take my options, right? I'm waiting for a break of structure. It is, again, if I want to take the play that I see in front of me is a play through empty space from point A to point B. So trying to fit myself into these little pockets is the only other alternative there. But it also just it just takes me off of the path that I have been building for fucking years. I can feel it. I felt dissociated today. I feel like I just did crack. And I don't like it. You know, it's addicting, it's fun, and I know that if I probably really fucking hunkered down, I could probably pass like a fuck ton of these. But what happens if I do all that grinding and then they deny my shit? I did. You know, they deny my shit or they tell me that I'm making too much. I mean, I just saw somebody post that they were like, dude, I was making, I had 3 or 4 20 band. Uh, I know, but it's fun. It's fun. You trade your way on your own. Yeah, but the amount of money you're putting up front is vastly different than what you're putting up front when it comes to a prop firm. I mean, what I'm doing right now is working. You know, you are using such. I just did that on that in that scenario because it's fun. Because it's not real. But that's the thing. It's like, why am I doing that? In a way, you're right. I can't. This is how I live, and that's what like I had a thought about. It's like this is how I fucking live. So like, if to your point, you're right. If I decide that on this funded account because it doesn't matter, that I'll just fucking let it go. Am I really going to be able to keep that from bleeding into everyday? Like we don't get to compartmentalize everything. The way you are in trading, the way you are like at your these things bleed into everything. Everything's connected. So I mean, like, yeah, the instant gratification part of me wants to latch onto this badly. You know, it's fun. It's everything that I've ever taught faster, funner. It's yeah, full porting, fun. But is it sustainable and how is that going to affect me? Because I can't afford to be taken off this path. You know, I can't afford to have this be my sole focus. If I decide to take a trade here and there, and I mean, fuck, I just got approved, so like, I'll see what it goes. I'll see what happens. I'm not going to full port on those. I'm trying to do right by them. But if I see a pocket of empty space and my fingers hovering over the 10 lot, that's what I'm saying. That's what I'm saying. It's instant gratification, but you can't separate those. If you start doing crack right now, it's not tomorrow or by 2 weeks from now, we're all gonna know you're doing crack. You know, it's like if you fall to that, instant gratification, you know, the more you're likely to keep doing it, and the more that it's likely to fuck you up. So, but I'm gonna go ahead and long in queue here now. Oh, I'm sorry. Oh, good times. Order filled. They do. They do. They prey on people's inability to control their sizing and emotions. Yeah. And I think the fact that what I do for real is in slow motion, it makes it a lot easier. Sounds like my sex wife. Oh God. Damn, I said long end Q. You could already TP'd right there. Look at that. All right. Again, here's a is there anything to actually take for the prop firms? Is learning about futures and how they function? Yeah. All right. So for shorter expiration trades or short swing trades, we know certain levels will bounce at a confluence and it's almost promised. So this can provide us with exit areas, bounces, trades, or rejection trades. A lot of you know exactly where you're supposed to TP and you don't because you're being a little greedy or you want to see how much extra you can pull out of that shit, right? When you start a trade, whether you need to write it down or not, there should be a pre-agreement as to what it is or where it is that you're taking, getting in and getting out. Period. Especially when you are dropping, and a firm is a great example of this. It did bounce. Now, that bounce didn't solidify it very long, and it ended up coming right the fuck back down and filling up the majority of that empty space. But that bounced. And when you're dealing with shorter expiration contract, what can't you have happen? You are looking, and this is true for everything when it comes to shorter expiration contracts. It is empty space. It needs to be empty because it either, yeah, it needs to be empty because otherwise you're dealing every single tick, that every single resistance that is above you, every retest is going to destroy your contracts. So this concept can also keep us from taking trades due to risk to reward. So using the example posted, why wouldn't we want to take a full-size position or a position at all if we wanted to take a firm down to its support? If we know we are nearing a major bounce level, then this must be considered before taking a trade, which is why if I miss it, I miss it and I get over it because I'm not a little baby. Okay. And I know that like it stings to miss out on your trades. And you're going to accept that now that you're going to miss a few of the ones that you wanted, but it's focus on the ones that you can catch and that you do catch. There is a lot of times that people ask me, and especially after like Starbucks and all these other plays that we take, they ask me, would you take this now? Brother, if I could reach through my screen, I would. You know, because it's like, yo, you're so close to that. This is, in fact, I would say that this is a perfect example of a chart that would be on. I don't. What do I have? Nothing. I have a floor. I have no structure above me. You could build a box right in in here, and how the fuck would I know that? Right? I don't. I can't. So leaving things alone, right? Or knowing when to pass something up is just as good, right? Now, that's all good, but let's find you and let's find something, right? No way. Did I really? It's crazy. It's just crazy though, right? That's fucking crazy, dude. I mean, it's just the chart though. The chart is just telling me where it's going to go. Like, listen, when you get up here, oui oui. If you're French, I'm really sorry. Beautiful. Well, I think this class is fun, but what's really cool is that you guys can watch this happen live. And yeah, it's on an extremely lower time frame, but nothing that I'm showing you is untrue anywhere else. Um, so I mean, right now, would not be a good time to go long. It would not, right? I have too much above me. right? I mean, you are holding above the 221. So yeah, but until I could get confirmation that that floor is being reclaimed, my hands are off. Expansion, contraction. Now, what's likely going to happen in areas like this? A lot of the times you'll do this, right? Another one of these, but here, stuck in between two boxes. We'll come back and check on that in a minute. Now, we're going to look for something. What we're going to look for is something that has moved versus something like that is actually something that we would want to be uh we would want to set alerts on it, right? So you guys are welcome to set that up or drop your request or anything like that. So here's an example of something I would not want to take at the present moment, as tempting as it might be, right? How close am I to my first target? Now, what does that first target provide? A floor. And what do I need to grab onto in order to continue moving up? That floor. So in order for me to have a confirmation that Disney is going to continue moving up, likely to this point here. Just an FYI, if you don't have a box at the top and it's just you just slap it right there. That's your wall. So that being said, right, I would not take a trade like this, being that it's in consolidation and that it's under a floor it needs to reclaim and above slightly a floor that it would likely retest. So this is something that you already had your chance to take Disney. And if you missed it from here to there, it's over. It's over. Here's an example of something that is in consolidation. Now, it's a tricky little fucker because it almost looks like it's a box. It's not. It's not. That's my box. Now, being that I'm bouncing off of this, the play is not available yet. But because I have empty space here, right? And the move has not been made. And in fact, the move down has been made to fill up some empty space. And now you're retracing. Would I take it now? No, I would not. I would have to go down to the lower time frame and find an entry, which you can do, which would be right here, right? And then I'd try to take it above that 53.43. And then now that we're on the 4 hour, guess what? You got another one. So it would be a reclaim. That's why that wicked off of that. It would be a reclaim of 54.06, a punchback over 55, which should lead you directly to 56. Please stop, Toothless. And it also appears like there's a pretty nice little downtrend. So what do we see? An opportunity potentially to go long and shoot up into that empty space. It is in consolidation and has yet to make a big move. The risk to reward, I mean, I don't know because I'm not looking at the contracts, but I would assume a move to $60 from 52 or even from 55 would be a pretty profitable move. So this is an example of something that's setting up, not necessarily triggering, but it has not gotten close or expanded to. And this is, again, measuring if it still has the available empty space above, and it has, like, if we were here, it's too late. If there is a green candle shooting off of cost basis and it's here, even though it's there, I'm not taking it. Now that's me. That's this one thing alone. Now, I know sometimes you get away with it, and I know every single one of you in here has probably tried it. It's already ripping, and then all of a sudden, you get the opportunity, or it pulls back and you get in and it rewards you. That's fine. But it's only fine until it happens again, and it doesn't. You buy, and it immediately reverses, right? So that type of me, in order for me to stay disciplined, because that is the backbone of all of this, I know that taking something after it's gone defeats the purpose because I'm looking to buy cheap contracts that don't have volume running into them before they do, right? Or just as they do. And so by taking something that is moving through empty space halfway or whatever the case may be, I'm putting myself at risk. So I choose not to take these trades that have already broken or bursted out of their area of consolidation. Target's a good example of something. Yeah, there you go. Yep, exactly. Monster is not something I would ever take because I have a brain. No, I'm just kidding. So it looks like it's forcing you to cut those wicks, which is, again, typically a no-no, but we got to go with points of contact here. Yeah, points of contact there. You've got a lot of consolidation for sure. And Monster is something that will consolidate, make one big move, reel you in, and then never move again for the next fucking couple of months. So again, I would never trade something like this. But honestly, if it did, it has a holy shit. It has a gap down right there at 62.25. So when it goes up to fill that gap, and here you go, here's a little downtrend. Boom, bop, bam. Oh, oh my god, dude, I love when that shit happens. So by everything, by thunder, it would reverse. If you fill your gap, you break your trend, and you fall. Yep. All right, let's see if we can find something else. So let's zoom through these. Grox or snow, yes, consolidated. Has not moved. Look, average, look, the same thing I just teaching you guys. Date range. That sounds like a dating show for people who like guns. Date range. Sorry. It's closing time. That's close. So that's something that absolutely. And in fact, watch this tomorrow. With futures moving down, I wouldn't be surprised if you gap down to your cost basis, which honestly could provide a pop back up. But this is something that is ready to move. Has empty space below it. I actually wouldn't mind trading this one myself. This looks like a pretty. I don't like. No, I mean, I like guns for sure, but it doesn't define my personality. You know, it's just a piece of metal that punches just taps another piece of metal real fast. You know, every time I hold a gun, I'm like, dude, I'm just holding an instrument of death. Like, holy shit. But again, I'm not somebody who thinks that guns are bad. Ain't some liberal sissy. All right. Oh, dude, I'd love to. So we have crosshairs as your. Is that? Oh, yeah. Nice. That's cool. All right. Um, I just noticed that. So anyway, snow. Actually, I need to set alerts on this one right now. Oh no, alerts everywhere. It's a good setup. Crocs is something that I would not take, obviously. Not right now. So there's another example of while this I made some. I almost made around $60,000 off of Jamia. Bought that fucker at $14. Holy shit! No way. It makes the same setup every time it does it too. Same setup. Yep. This is right where I remember first buying it. Right in that low. Punchback earnings had just happened. Nothing happened. Empty space. Tons of empty space. Look at where it ends. Beautiful. But for Jamia, this is an example of something that has already filled up its empty space. It's done. So obviously, even to the unless you were playing it to the downside. So, all right, Mara. I'm worried about BA. Meta is something that if it did make a reversal, it could make a nice play. But all right, let's see here. What are we at? We're at 2 hours and 10 seconds. Feel like this is a pretty damn good class. But I do think taking a second here, if you guys have any questions, take a look at some of these ones you posted. Chewy. So that's another one, right? This one has made a big move. Like, and at least on the weekly, you're still in the middle of what could be an even bigger move. So pulling back right here, I think honestly opens up the opportunity because of how you did it to potentially build a box, right? And you might have the outline for that box now. So unless you were trading it up, which I think would be here and then up into there, I think it would probably be something that I would wait on as well. Well, you're looking for 45, so I don't see anything wrong with that. You would just have to go down here, 30-minute, good box. You can see this separating you, 42.67 above that. So literally a nice pocket right there. So yeah, you'd be taking it up to that 45. Yeah. Okay, so when I say the first green candle to my left, a lot of the times, yes, the first target will be a major floor. But that does not mean that if I had a green candle right here, that would be the first target. Any green candle is going to be a target. If it had enough juice to go green or red, right? So let's like look here. This is an example, but in reverse. If I was to go short on Meta, this red candle would be the first, right? And as I go down, look, now it's a box. That would be my first target. Now, interestingly enough, no, it doesn't. Does it? No, you don't. So that would be a first. Honestly, you guys should maybe with that gap down, look at the gap right there. You might be able to hit that. But yeah, I would say that the first red, so in this example, the first red candle. But yeah, you are looking for the first green candle to your left. And this happens to be in structure, but this was the reason that I set that target on the Qs, right? That was that wall. And that's the first green candle to my left. You'll notice though, when it goes up, what does it fill? All of the empty space. All of it. To the last fucking green candle. Right there. Last in the most recent price action, although this was your floor. If the floor is reclaimed, it was the last green candle to your left. That's going to be always true. So let's see. Yeah, I mean, that's it. Let's see if we can find Pepsi. Yeah, Pepsi should provide a pretty good example of the first green can. So right here, right now in this example, I'll have to do that because that's a solo floor that you just flush through. So that would make the first target. That's 138. Now this green wick here, another target, right? But ultimately, it could be up in there, right? On the green candle concept, those are there are times you use the wick and there are times you use the candle close. What is the criteria of when you use one or the other? Um, on the wick. Oh. So if I have so for this example, I highlighted the green wick. Do you see how that wick responded? Boing! Straight the fuck up, back up to 142. So there's volume sitting there. So that's going to be, this is actually a concept that we had talked about previously because if you have a box and there's a big ass red wick coming out of the top of it, when you pull back, you'll hit the red wick first. Think about like most wicks I don't really care about that are just kind of wicking around, but the big ones where price really reaches out, if that was a price that was rejected heavily or bounced off of heavily, you should expect price for to react to it. So if it's a green wick or a wick that's stretching, if the wick was out here, you dip down and you bounce off of 136, that would be a target. But I would say for the most part, right, you're typically looking at a green candle close or the floor of something to your left. So let's look at MU, right? Now, it's not a surprise to me that you stopped here, right? And this is actually rock climbing 101. You pulled yourself past, and this is a lot of the times one way that we can know that we're going to continue moving is you'll go past one of those major floors. And then when you retrace, you'll retrace and grab onto it. Now you have a perfect box. And now you know that if MU loses that floor, you're likely to come back down. Now, in this case, there's no major red wick outside of it, so it would just be the top. So right here, this would be a target. Two major big fat green wicks, but ultimately that first green candle here would be that would be the target, right? So the way that I typically do this is when I have a target like this, I trim here and I let runners go there. And I'll explain why. 1, 2, 3. If that happens to be enough to push us back, I've already reduced my risk. Now, because it's not a floor that ever had enough to really do anything, right? I mean, it didn't ultimately, it held up twice, but you close flat up against it and the majority of the volume is up at 130. I typically lean towards those green candles getting hit, but those I reduce my risk at an area where risk could be applied. All right. Now, we're gonna go ahead and stop the recording here. And get ready for tomorrow and next class. But while you're doing your homework, one thing that I will encourage you all to go and do is to look outside of where you're comfortable, right? Look outside of, and not like we're not just charting for just to find a good play, but we're also charting for repetition, right? So like one way that I did this when I was, you know, first starting out, or even, you could say that I still do it to this day. Hold on one second. It's okay. I'll clip that. Anybody who purchased Alex, anybody who spent $50 on to take the class again, or if they bought the PBS workshop or yearly, then that's something that's they can apply. So, all right. You can go to your screeners, go to stocks, and listen. I'm going to say this probably a couple more times. If you are truly focused on getting better at this, highly recommend that you just start going through it. Pick the bigger ones, right? You can dip into if you can see the symbol, chart it, you know. But go down and pick out the ones that you've never heard of. Identify whether or not they're a shitty setup, right? Or a good one. It's too late. Repetitions. And I really love that you guys kind of chart together and stuff like that. But one thing that I would recommend if you do this is that you be more open, right? Bringing a watch list to class of like stocks you're going to look at versus working together with somebody to just start screening, like go, whether you're using a screener or you're just going out and charting for the reps. That's going to be a great way to get in the reps while also looking to identify a high probability setup. And not only that, but develop a actual watch list of things. Because if you find something that you really like and it looks good, right? You go, again, you're in the finance or you're in the health sector, energy minerals, wherever that may be. If you click on it and you're like, yo, this is a great setup, you add that to the watch list, right? You can do that by right clicking. No, you do that by clicking that button right there, I think. Wait, hold on. No, I don't know. Add that. Oh, click this one. Add symbol HD. Click the plus button. Yeah, I forgot. Home Depot. Wow. Wow. Alrighty. We'll go ahead and stop now. Where's my OBS? There we go.